founder or an entrepreneur. You wanna take your company value to 300 million, we gon' show you how to do it. But we got the roadmap, the aspirations. We'll give you a game plan and strategies. Seize control of your company's destiny today by tuning in to Private Capital Mastery. Let's start the show.
Welcome to the Private Capital Mastery Podcast, where we delve into the world of financial empowerment with a personalized touch. We are here today with Steve Charlton from Wisdom Financial, who specializes in bringing in unique approaches to helping clients reduce debt, manage taxes, and increase spendable income. I like that. Today, we're exploring key financial strategies, including income for life planning, long-term care protection, debt management, and tax awareness strategies. Steve, thank you for being on the episode with us. How you doing today?
Doing fabulous, Brian. Appreciate it. Glad to be here.
Glad to have you here. I mean, we've had a couple conversations and learned a lot about the work that you do and you've been doing. How long you've been doing this work, just as reference?
19 years.
19 years. So just getting started.
Just getting started. Yeah. Getting warmed up, right? Yeah.
Yeah, getting warmed up.
Catch my sea legs now.
So almost 2 decades of experience in the work that you do. And, I imagine that you see a lot of a variety of case studies and stories and situations. And, I imagine you have to adapt, right, your approach to the circumstance of the individual client. But love to talk about that. Love to explore that with you. Because as you know, the work we do on the Private Capital Mastery Podcast is really there to empower founders and entrepreneurs in their journey, right, with their companies. And in that journey, we find that, early on, they'll bootstrap their business, right? They'll spend every dollar they can in reinvesting into their company for purposes of growing and scaling. And, for those that succeed and do well, we see that they accumulate wealth. And there's a time, very interesting to me because there's this intersection of time where a client of ours will find themselves at the intersection of, okay, we're earning great money. We've developed amazing wealth, right? Meaningful wealth. But then they say to themselves, well, gosh, now the business is becoming a liability from the standpoint of asset protection, right? And so, I imagine that in the work that you do with the clients that you have, you could relate to that storyline and that narrative. But let's set the stage here, because I think that there's going to be a lot of powerful information you're going to be able to provide, and I'm looking forward to listening myself. So, but here we go. So, let's talk about case study, because I think case studies are powerful. They really illustrate the work that you've done and the examples of the challenges that your clients have faced, right, when it comes to financial challenges, and love to hear how Wisdom Financial, how they personalize that approach, in each situation to address and overcome, those challenges that they have. So, please do share with us, enlighten us, share the wisdom of Wisdom Financial.
Well, appreciate it again, Brian. And, I typically start the conversation off by just making a statement. I say, I believe that the IRS tries really, really hard to take the joy and fun out of being successful for high net earners. Would you disagree with that statement?
No, and we were talking earlier, when you study the tax code, our tax code is designed for money to move, not sit, right? Mm-hmm. So you need to employ strategies that serve that purpose, because there's a way, and I'd love to hear, kind of your approach to that with your clients and what that means to them.
Well, if you picture your wealth like a pie, right? And I then handed you a knife, and I said, hey, Brian, listen, you get to make the choice. This knife is going to dictate how much of a slice that you get to choose, how big you're going to carve out of that pie to give to Uncle Sam, to give the IRS, right? How big of a slice would you want to give out of your wealth?
Me personally, I mean, I want to obviously work within the tax code, but knowing what I know about the tax code, um, to your illustration, I have the ability to take a look at that pie and cut out, of course, fair share for my family and legacy, as well as, to pay my dues to the federal government and state governments. So my answer would be to create the most efficient tax structure possible.
And that's what we do. We teach people how to control their knives. Most people are not, unfortunately, whether it be from what we discussed earlier, just lack of knowledge, they didn't have a finance class that explained this and taught, so that's why we always come from an educational approach. And, but to kind of utilize a couple of different examples, we've got one, he's actually out in California, and he distributes as an income $400,000 a year. And yet, because of how he does it, he actually qualifies to receive California food stamps.
Interesting.
$400,000 a year, and he qualifies for food stamps. And the reason why is how his distribution assets are positioned. But if you look at it from a different perspective, we've got one of my friends, actually, his father passed away and owned just a buttload of real estate. His net worth was just north of 200 million. And it was all in real estate. So when his dad passed away, the kids get the net worth. They don't get a big pile of money, right? They get a pile of buildings, no cash.
Assets, yeah.
And what's coming from that, right? A big giant estate tax bill to pay. And where are they going to pay that from? They got to do, and a lot of it's large commercial. We know how that's going to be, what's going on in the income or the economy right now.
Right.
And so they got to do a fire sale, right, to try to do it, right? So, the tools that we utilize are like a hammer, right? And the good thing about a hammer is a hammer can build a lot of different things. So it's really understanding that. But more so just saying, hey, I need to know what I want to build first. And that's obviously the conversation that we have with each individual client, because everybody is as unique as their thumbprint and their DNA, and they should be treated as such. There is no one size fits all financial plan, financial tool that exists out there. So it really kind of helps to have, employing a whole team of experts and professionals to come alongside you and be able to do just that. So that's how we do it for our clients, is sitting down, asking some questions, figuring out where they are and where they want to be, and then creating the most ideal, optimized, maximized solution to help them achieve exactly what it is that they want to achieve with the most efficiency, control, and safety. That's the key: efficiency, control, and safety. As long as you have a foundation with those three tools, you'll always be ahead. You'll always be able to, come out, where you want, because you're utilizing those as your guideline.
Yeah. When you think of these guidelines and you think of the unique situation of each client, when do you want to have these conversations? Because and I ask you because we have clients that are growing and scaling their companies and ultimately leading to some sort of exit strategy or liquidity event through the sale of their assets. Those assets are, buildings and businesses. But when should they be sitting down with you? Is it on December 31st? Is it, and then I say that tongue in cheek, but when do you want to sit down with a client to appropriately tax plan with them?
I don't necessarily know that there's an exact time period for it. But if you kind of look at your financial life cycle, like climbing a mountain, right? On our way up, that's the accumulation phase, the ascent. Eventually, they're going to have that event in the future, whether it be retirement, sale of the business, whatever it might be. That's going to be the summit, right? We go plant our flag on the top of that mountain, and then we have to get back down. And that's the distribution phase of our financial life cycles. So unfortunately, I think the reality of our financial system is that the common strategies and most of your clients are not common. And when we talked about the income, for the top 10% of earners earlier, those are uncommon people. mathematically speaking, or statistically speaking, yet most of those people are utilizing and leveraging common advice. So, and that's just how this industry is. Unfortunately, it's become more about your money than you. So the time period is always on the way up is the best, because the earlier I can understand the tools that I want to bring up that mountain that are going to help me get back down, the better off I'm going to be. But we meet a lot of people that are near or right at the top, or maybe slightly on the way down. And they just didn't know because they were in that accumulation phase. Well, why? Well, 99% of this industry focuses on the accumulation phase and that eventual retirement date. But if your goal of climbing Mount Everest is just a summit and then you die at the top, well, then you hit your goal. But most people want to be able to get back down and be able to tell about it.
Yeah.
So when we meet with folks, most do not have a true distribution plan. They just have an accumulation plan. If you employ those same strategies on the way back down, it can just become very traumatic, because the IRS is, they're coming for your money when you're alive and when you're dead.
Yeah.
And starts out with the first conversation, first question is, do you think taxes are going to be higher, lower, or the same in the future? Most believe that they're going to be a lot higher, and mathematically, I would agree with them, because we've got 32 some $trillion in debt, but we've got it's the unpaid liabilities between Medicare, Social Security, and Medicaid. You can either get rid of those or you can raise taxes, because they're taxpayer benefits.
That's right.
So they're coming.
There, in knowing that there are specific financial strategies for each of these clients that Wisdom Financial provides, right? From purposes as you described. I love that illustration, by the way. There's that ascent, and then there is the descent. And when we're ascending a mountain, as you described, we're in the back of our head, we're always thinking, gosh, when do we get down from this? When is it going to be over, right?
Yeah.
But but it is the challenge, it is the journey that you go on. But it's difficult to plan for the descent while you are ascending unless you have the right advisors with the experience that you need to apply those formulas and to apply those strategies, ultimately to their retirement, right? So understanding that everyone is unique. Generally speaking, what is your approach, and how do you ensure a worry-free retirement plan for individuals, and what steps does Wisdom Financial take, to one, analyze their current financial position and net worth, and then also, how do you go about creating a balanced plan for those clients for their golden years, let's call it?
Well, again, it starts with those three key components of efficiency, control, and safety. But then when you mentioned the word plan, most do not plan. They don't have a plan, especially given, like we said, if 99% of the industry is focusing on accumulation, that's a plan to accumulate, but it's not a plan to distribute. And because if you employ the same strategies on the way back down, and which is, hey, listen, it's okay to lose money on the way up. If you do that on the way back down, it can be very traumatic. So we focus on, if we kind of go back to that pie, there's three different types of that pie. You have your accumulated money. That's obviously everything that you build and save and grow. That's your worth. You have your lifestyle money. Obviously, when you're still working and you still have income coming in, that's what you're utilizing just to live and buy houses and drive cars and wear the clothes that you wear and put the kids in school. And we hopefully eventually want to have it where our accumulated money takes care of that lifestyle money in the future. But then you also have transfers. Transfers are where you have unknowing or unnecessary money leaving your wealth in the form of taxes, debt, and Social Security. If we learn those tools on the way up, it allows us to control the knife in our wealth pie to not have things leave. Like I gave you the example with the guy that generates $400,000 a year of income. That's all tax-free income. It doesn't get reported to the IRS. They know he's got it, right? But it doesn't get reported. It doesn't go on a 1040. So and it's on NBC, not 1099 as well, because there's 4 different tax buckets.
Yeah.
You've got ordinary income tax, and that's where the mass majority of Americans house their assets. in tax deferred products and IRAs and 401ks, 403bs, SEP IRAs. And right, they're going to be distributing out of those vehicles either because they need to because they no longer have an income, or obviously eventually they're going to be forced to through RMD. And that becomes problematic because all of that stuff gets stacked on top, and it gets stacked paying the highest tax rates in the whole tax code. So where does the federal government want us all to put all of our money in what bucket? Well, it's the ordinary income tax. Hence the reason why 91% of Americans, that's where they accumulate. Obviously, you also have your capital gains bucket, where obviously anybody is in business, going to be selling business, right? You're going to be selling something for greater, hopefully, than what you purchased it for, right? Usually you're right around 20% there. You have a tax-free bucket. The only thing in the tax code that's tax-free is municipal bonds. And then, of course, you have a tax-exempt bucket, Roth IRAs and permanent life insurance. This is the bucket that we like to focus on. And the reason why we like to focus on that is if I just looked at it from a math perspective at $100,000 income, if I have $100,000 income in an ordinary tax bucket that I'm distributing on, well, I might be able to take home 70, and that's in today's tax code, right? And then, of course, that there's one transfer, didn't control the knife on that. Of course, the government says, hey, you're wealthy, you don't deserve to get all of your Social Security, so they tax the Social Security to 85%. There's another transfer that did not need to happen that is going to be going away, right? It's just money leaving our economy that doesn't have to. So I'm left with 50 grand, right? And that's where 70 grand, out of a 30% tax bracket. You're in California, that tax bracket's going to be higher just because your state taxes, right?
Yes, sir, it is.
So with capital gains, maybe you end up with, $80,000, right? Because not the whole thing is not going to be taxed because it's, it's only on the gains. But again, now you're going to be taxed Social Security about 50%. Municipal bonds, you're going to be taxed at 85% of your Social Security. So it's called means testing in those three buckets. In the tax exempt bucket, again, Roth IRAs and permanent life insurance, when I take out $100,000, I get $100,000 I can spend, and it's not means tested. So it gives me control of the knife. Now, do you put everything into those? No, certainly not. Especially given the fact that if you're going to be selling business, you're limited where you can. But with the opportunity from a business owner perspective, when we're looking at the hammer, knowing what to build is important, right? And what they can actually do. Well, one, they can utilize buy-sell agreements. You got a partner, cash value functions in a buy-sell agreement very, very simply, right? Something happens to one of your partners and one of your team members, and it's not going to negatively affect the business. Right. So it also can be, the cash value of insurance policies can be a very good recruiting tool, and especially retaining top talent. These are these executive deferred compensation plans. I mentioned, the NFL coaches, Jim Harbaugh. I'm a Michigan guy, right? So it's my boy. And so the way it works at Jim Harbaugh, and he learned this from the NFL, when he retires, he'll get $1.4 million of tax-free money every single year until the day he dies. And that's tax-free, right? The government isn't going to tax him a penny on it. When he passes away, the University of Michigan is then going to get that $59 million death benefit, and it's all tax-free. They get their money back. So it's a way of getting additional compensation packages to key folks, that are highly sought after, you're trying to recruit, and you eventually get that money back. Think about your most important executive that's on the payroll. How impactful would it be if they came to you one day and said, hey, listen, somebody else made me an offer and I'm thinking about leaving? What does that mean to the business owner, right? How does that make them feel? How bad do you want to keep that person? What are you willing to do for it? If there's somebody you want to recruit, maybe to be your chief operating officer, or, for, maybe a divisional vice president, something like that. And you want to, that they're highly incentivized to stick around for a certain period of time, 5 years, 10 years. You want to lock them up to those things. What does it mean if you could bring another tool to the table to not only get them on board, but to keep them on board? Then you have your golden handcuff plans, right? Key person policies. Replace a key person. That's what obviously these are all business applications. Do it in the terms of business owner, really cares about. Absolutely. And those are three main tools, different tools that you can utilize the same hammer to build to give yourself a little bit more protection, control, efficiency, right?
Absolutely.
Safety.
This is the safeguards. These are absolutely the safeguards. And what's interesting about this is that if you look at the dimension in which you're speaking of, these safeguards are important for clients because they provide the ability to either defer income or to receive income in the future, but in a tax efficient vehicle. And we love that, and you talked about key personnel. In the work that we do, if there is debt tied to a business, at times debt providers will require key man life insurance or key person life insurance. That could be one or a few individuals in an organization. And when I thread all this together in the work that you do and the work that we do, the safeguards that you're implementing in the individual's life certainly provide safeguards for the business. Because if you do have a key person, a key executive in an organization, and if their life were to run short here on earth, right, and they were playing a role that contributed to a meaningful amount of the business, that insurance policy, that key person life insurance policy, could be utilized to either pay family, it could be used to pay back the business. And what we find is in key person life insurance policies, they want to utilize that fund not just to cash in on the life insurance policy, but to enable the business the time frame that it would need to go find a replacement of that individual. Because when you think of the business as its own being, as its own person, right, it still has a lifespan. And mostly, S corporations and C corporations and LLCs can and will outlive a human life, right? But what are we doing to safeguard those entities, right? And that needs to be threaded together with both the individual's lifespan, but also allowing for the safeguards and protections that you were describing. And specifically to debt providers, if you think about this, if you take on, let's say, a $5 million debt instrument, and there's a key person issue within the organization, that policy is likely going to be, $5 million or the principal balance of that loan. So what happens over time is, in theory, that $5 million loan would be amortized down to zero and paid off. But that life insurance policy can exist beyond the term of that amortization schedule of that debt. And there again, when personally in my life, because I'm a husband for the last 18 years and I have 4 children. And when I had planned early on in my career, I planned for, okay, I'm going to do everything I can to be productive, to be efficient, to generate wealth, but I need time to do that. And that time could be, have different milestones along the way, 10 years, 20 years, 30 years. But if I were to pass short of that plan, right, then what? Who's going to fill in for me, right? And so what I did is I personally layered in term life insurance policies. So if I were to die prematurely, my family was still okay. My wife was okay. My kids could go to school. They had a roof over their head. They had food on the table. And I thought about this a lot, and that's why I planned like this. And I had good advisors around me advising the same. And then, of course, there's whole life insurance policies which serve a different purpose and as related to wealth accumulation, even asset protection. But this is the overlap of the work that we do. The safeguards that you're presenting and providing to your clients are indirectly providing safeguards for the business. And our goal is to preserve enterprise value in these companies. And you talked about, the income class of capital gains. And, what we typically see is that these companies, when they are sold, their tax basis is pretty close to zero, right? Because they depreciated the assets, they amortized intellectual property. And so when that occurs, right, the gain is, for the most part, majority of the sale of that company. And there are certainly ways to plan for that. And the planning that you do, crosses over that personal life, but also the lifespan of that company or entity, which is interesting, right?
Yeah. I mean, if you think about it, life insurance is the only insurance that we're all guaranteed to file a claim on.
Yeah.
When designed properly, they're not really designed for the death benefit. All they do have that death benefit, like that example with my buddy with the $200 million real estate. I mean, dad passes away and there's some death benefit that comes to him. Now they have the opportunity, tax-free, to utilize those funds and how they see fit. Right? To help them with that. Hey, listen, let's maintain, let's find something that's going to go, build and grow and manage and manicure this, this $200 million asset.
Yeah.
While we are still taking care of an estate tax.
Yeah, absolutely.
So again, the hammer can build a lot of different things. And that's the good thing about it, right? Most people do not understand. It's the greatest secret in the IRS code. There's 3 different tax citations, TEFRA, DEFRA, and TAMRA, that are built inside of these policies that allow you to grow your money tax-free, access your money tax-free, and transfer your money tax-free. So the conversation becomes less about accumulation and more about utilization. So if you think about it like from a bank, let's say you want to start a business and you want to open up a golf course, and it's going to be $100 million, and you go to the bank. The bank is never going to give you $100 million from their deposits. The bank is going to dip into their tier 1 assets. Tier 1 assets are liquid cash, and 20 to 30% of every large bank's liquid assets, tier 1 assets, are called BOLI, bank-owned life insurance. They're permanent life insurance policies. It's called leverage, right? And this is the beautiful aspect of how these work. So what they do is they go take a participating policy loan outside of those policies of $100 million, and that money doesn't come from their cash value reserves. It comes from the insurance company's general account portfolio. This is leverage. So I'm borrowing from the insurance company their money. I'm going to earn what's called a positive arbitrage. You're familiar, right? So let's say that I have a 4% loan value for that money, and let's say my account's earning 5%, so I'm earning positive 1% arbitrage. I then go sell that to the consumer at an 8% loan value, so I'm kicking off another 4% there, and that money continues to sit there internally inside of those policies and continues to grow, because the actual value of these policies become an ever increasing asset, especially when I start to distribute, compared to IRA assets and things of that nature, which become an ever decreasing asset once I start to distribute. So they just function differently, right? So it's about utilization. I don't have to wait to 59 and a half to touch these things. I want to buy a car. I want to send my kids to school, right? If I'm going to pay for the school, why not keep that money inside of my personal economy forever, compared to just giving that money and losing on the cost value of those dollars that leaves my economy so that I can pay for school. So again, hammer builds a lot of different things.
It's a great tool. It is. And this is great insight. This is great advice. And, some of it's redundant to some of those listening, but, for others, certainly, they're just learning about this. And it is crucial as they continue on their path and, building that wealth and building their companies and preparing for that descent, as you described. So to wrap all this together, what can individuals do proactively as they work towards the best financial version of themselves, right? We're always talking about, the physical aspect, and that's why I laugh a bit here, but we need to be thinking about the best financial versions of ourselves, right? And so with that thinking, why is a personalized approach crucial in achieving these goals?
Well, Brian, goes back to that, the DNA and the thumbprint conversation. Everyone is specifically unique. They have different goals. They have different dreams. They have different genetics. Obviously, we don't know what's going to happen to our health in the future, and legacy conversations. It's a difference, between the Rockefellers and the Vanderbilts, right? The Vanderbilts are dead broke. Rockefellers still manage $6.5 billion. Well, why is that? Because they treat themselves as a bank. And they utilize permanent life insurance in order to do that. Not with all of their assets, obviously. So we come at it as a team. So I think anyone that's out there that's looking, you know, find someone that's not a salesperson in this industry. You know, which unfortunately can be more difficult than you know, you'd think it would be, but you know, find someone that brings a team to the table, that you have CFPs and you have economists and you have CPAs and you have advisors and you have insurance agents, because it takes all of them, right? It takes a village, right, to raise a child. And it's the same exact thing when it comes to having success from a financial perspective. Is you need all of these different tools. You need a hammer, you need a screwdriver, you need a drill, you need the chainsaw, right? But if you told me to put up, you know, the picture on my wall and use the chainsaw, my wife's probably gonna be a little bit pissed. So it's, you know, it's understanding that utilizing the right tools for the right job is really the key strategy. And easiest way of doing that is starting out with a conversation and just going through a fact and feeling finder of trying to figure out where it is that you are right now as your foundation, what you know, what you have, and then trying to figure out where you want to go, right? If I put you in a sailboat in Chesapeake Harbor and say, I want you to sail to Australia, and you've never done it before, you're probably not going to make it. But if I give you a crew and I give you sextants and GPS, and then you know where to get your mail and you know get your food, know where to get your gas, you know how to avoid the storms, you'll be able to get there and be able to get there just fine. So you can get to Australia and you can enjoy the shrimp on the barbie, right? And that's the planning conversation. Once we understand efficiency, control, and safety, and we understand what a plan is and how to get there, then it gives us a clearer understanding of what we need to do today in order to be able to get to where we want to be tomorrow.
This is where we're very aligned, because the personalized approach that you described is exactly how we work, right? You have to open up a dialogue. You're not selling anything. I can't sell a client, nor have I sold a client on the concept and idea of raising, you know, capital or exiting their company, right? This is a strategy, and the strategy needs to be well thought out and personalized to the individuals and to the company. And that is all based upon expectations. But you don't understand and get to learn what those expectations are without opening that dialogue. And in that dialogue, you see that individuals will reveal their intended destination. And that's different for everyone. Everyone has a different horizon, especially when you have stepped into a business but there's multiple partners, right? Not everyone's the same age. And even if they were the same age, they have different life circumstances.
Mm-hmm.
And so if we can plan in the way that you described, is by opening that dialogue, right? Understand those expectations of the individuals, utilize a plan, but as you described, with the tools that are in the toolbox, we live in a world where we have very well designed financial products, right? I mean, there's such a thing as financial engineering, and we have so many different tools to utilize as we navigate through this planning process. We do the same with our clients as you do with yours. And there you find the answers in those conversations, learning what those expectations are, and ultimately tailoring a plan and a process that gets them or enables them to get to their intended destination. And when you do that, you don't only create a happy client. You know, in our case, we create lifelong relationships with these individuals. And it's very rewarding to see when those plans are executed, the fruit that comes from that. And I'm telling you right now, I agree with you. No one can sell you on anything. You need to have a team that's guiding you through each step of this process. And that process will evolve. You know, there's different waypoints, there's different levels that you will achieve and reach along your ascent, right?
Yeah, and there'll be new tools that are created every 5 years that, you know, that are going to do something different.
Yeah.
And you need to have access to those things.
That's right.
Right. And
right.
That's I think that's the key that a lot of people do miss. Unfortunately, a lot of people in this industry miss. Advisors, right? They try to do it all, be all to everybody. You know, I'm good enough to be dangerous at some of this stuff. I mean, I employ a whole team just for my own strategies as well, because it just makes sense. You know, they stay in their own lane. They are experts at what they do. I don't need my CFP trying to talk to me about taxes. right? He can understand tax planning, right? And the ramifications of certain tools and how they're going to work. But I don't need him talking about my taxes, right? I'm going to go to my tax expert for that. And so a lot of people don't have a real team. So that's really how we approach it. Same exact way, because the unfortunate aspect is a lot of people in this industry like to try to sell the hammer, or they want to sell the screwdriver, or they want to sell the chainsaw, but not necessarily what the hammer and the chainsaw and the screwdriver can do for the consumer, and what they can build, and how beautiful they can build these things, right? You know, and where they're safe and they're efficient. And the unfortunate, you know, I think more than anything today is you have companies that, you know, their CEO's fiduciary duty is to a board of directors and shareholders, and not to the end consumer. I mean, think about it. I mean, I won't name any names, but I mean, you know, there's certain firms that are paid by certain mutual fund companies, and guess what everybody has in that, and you know, that's in their portfolios. They have those fund companies, you know. So
Yeah.
it's a reality in our industry that you know, that money becomes a driving factor, and it should always 100% of the time be about the end user, the consumer's money, and the consumer's wealth, and the consumer's hopes and dreams, and where they want to be and where they want to go and how they want their lives to look. Obviously, barring any sort of, you know, early deaths or some sort of health concern.
Right.
It should always be about that. And, you know, that's what best, in my mind, that's what best interest means. Not about my best interests,
That's right.
but yours, right? Look at last year. I mean, I stopped counting in October, and I say last year, I mean, you know, year 2022, we have almost 20% downturn, and I stopped counting in October. But by October, just from the folks that I had spoken with, there was over 160, and these are new clients. These are not our clients, but new prospective clients. Over $168 million of money that was gone, right? Most people have earned zero over the last 2 years, and they're thrilled about it.
Yeah. Yeah.
It's weird.
You know, and I know you're being delicate with that description, but I'll share a story with you. And you know, you remember being a kid, and we would watch TV, and you'd get the commercials, and you know, the latest toy, the greatest toy, and you know, you would want it, right? And so my 10-year-old son came up to me and he says, "Dad, I want this. I want this. What did he want? I can't remember what it was, but he wanted this toy, and he had to have it, right? And he couldn't get his mind off of it." And I said to him, his name's Nolan. I said, "Nolan, I'm glad that you really took a liking to this toy, but you have to understand that somebody went to school to learn how to sell you that toy, and they earn a living off of that. And that's okay. They're not trying to trick you, right? That is a cool toy, but you have to understand that their job is to get you to want to buy that toy, right?" And he thought about that, and then sure enough, like, I helped him understand that if you want something great, there's a difference between selling and awareness. Like, you know, you and I work in a way to bring awareness through education and provoking thought. That's the whole purpose of this podcast, right? Is to provide thought-provoking ideas and concepts that, you know, perhaps a listener wasn't aware of, or they were aware of, but it reminded them to pursue those opportunities and options. And so I say that because it's a lighter of way of you describing what you just did. And so as long as we understand that, you know, there's a difference between selling and awareness, but once you become aware, you certainly need to have a team that can execute on what you become aware of, right? And how does that fit into your life plan? So I really appreciate you, Steve, for coming on and even provoking thought in me, and having this conversation. We will certainly provide links and contact information for yourself, so that individuals listening to the episode can.
Yeah, I'd love to share it with my peoples. Absolutely.
Absolutely.
They'd love to hear it.
Absolutely. And you know, I encourage everyone out there that's building that team to be careful in their planning, to know and be aware of what's available to you in your life circumstance as you continue to build and ascend in your companies. prepare for that ascent and prepare for that descent. Because at that point in your life, when you get there, and we all will, right? If we did not plan, if we do nothing, the result is you pay more tax and you take less of what you've earned throughout your lifespan.
Fact.
And as hard as that is to say and to hear, that is the reality. And that's what we're here for, is to provoke that thought, to educate you, and to bring you to the awareness that is required. And so, Steve, again, thank you for being on this episode. And
My pleasure.
yeah, I'd love to have you back again in the future and, to talk about more thought-provoking subjects and topics. But until then, I encourage everyone to tune in every Tuesday as we release new episodes of the Private Capital Mastery podcast. Until then, have a great week. I'm Brian Franco. See you soon.